Hi, I'm Jocelyn with Just Accounting, and here to give you an update on the PPP forgiveness loan funds and how they could be forgiven. So the government has come out with a PPP forgiveness application. So I'm going to share my screen here, and I'm going to kind of show you if you are just Googling, if you Google PPP loan forgiveness application, you'll come up with that. So if you have had a loan from the PPP, which we talked about before, and you've gotten money from the program, everyone who has gotten money has got the information from the banks that they got the money from, or the lender saying what the rules are for whether it'll be a loan, whether it will not be a loan. Well, the Treasury finally came out with some guidelines and an actual application. It's called Form 3508. So you'll see that at the bottom here, SBA Form 3508, as of 5/20. So this is the application to, it's about 11 pages, to apply for the loan forgiveness. Now I will tell you, my bank, I did get some PPP money. My bank sent me a notice saying right now they're not really accepting this application because they think it might change. So full disclosure, this will probably change. You want to stay up to speed on that if it does change. So work with your bank. Some of them will obviously have to have this type of application, or they're changing this application to fit the bank with the bank's name on it, et cetera, and not necessarily the Treasury information. Some of your lenders might say, we want this application, you need to submit it before the 8 weeks or after the 8 weeks or whenever you're required to submit it. My bank doesn't know when we're required to submit it at this moment, so I'm just waiting for further instructions on that. But it does say, so I'll just go over briefly with you, to apply for forgiveness of your PPP loan, you, the borrower, must complete this application as directed in these instructions and to submit to your lender. So it's in no uncertain conditions that you at some point are going to have to submit this information to your lender, and that is probably going to happen. So this is the video for that. Borrowers may also complete this application electronically through their lender. So your lender might send you a link where you then fill it out. But this is the actual form that's going to be submitted to SBA at the end of the day. So there's a lot of components to this application to not make your PPP money a loan. So if you don't want to pay it back, this is a video for that. So anytime they start off with the instructions of what the documents they're asking for, they're going to define the information. It's kind of eye-opener because they're going to tell you what you think you should probably already know, but you need to make sure you realize this. So pull out the application if you had it from your PPP, and these are all of the different, some of the information that you have on the first page. So it goes into page 2 for the actual instructions and definitions. Page 1 and page 2 are just the definitions and kind of guiding you into the process. The third page on this is here. And so on this one here with the Treasury, you can type it in. So let's say it's Main Street Diner, and whatever you put on the PPP loan has to be the same, or I would suggest that be the same because that's how you got the loan. So let's say Main Street Diner LLC is your DBA, and you're on Main Street, and your social security number is here, or your business ITIN, or whatever you used on your application. That would be that. Your primary contact, you want to put that down, email address, et cetera, et cetera. Then you go to your SBA PP loan. In the email that you got or the documentation from the lender, there will be an SBA PP loan, and there might be a lender PP loan, which there should be two numbers. One, the SBA connects to you, one, the lender connects to you. So you can put those down. You want to put the PPP loan amount that you got. So pretty easy so far. When did you get the PPP loan disbursement date? Now, I believe that will be the date that it says, the date you received the PPP loan proceeds. So if it was May 1st, you put May 1st. What day did it hit your bank account? Put that amount. Received means not that you're accepted, but that you've actually received. You have control of that money at that point. It's in a bank account that you have control over. That's receiving. So the day you received it in your bank account, that's that date. Employees at the time of loan application. So that's the number of employees at the time of the borrower's PPP loan application. So if you run a payroll on 9/41, so go back to the day you applied, check your payroll for the week at that point, see how many employees you had at that point, because you would have put that on the application. So essentially that same number needs to be on this. You put on your application how many employees you had, put the same number here. Employees at the time of forgiveness application, this is a time in the future. So this will be a question mark for a lot of people. When will you be submitting this? Right now, there's no direction on when we're supposed to submit this. My take on it, just professional take and my own opinion, is that they're going to have an alternative payroll period, which goes through June 30th. My thought and gut feeling says that we won't be applying for this until after June 30th. So everybody's time of forgiveness has had the same equal opportunity to get forgiven. So at that time, so say it's July 1st, you're applying and you submit this, how many employees did you have at that time? EIDL advance amount, if you applied for the EIDL, how much did you get? And there may be an application number as well. So go digging for that. Payroll schedule, the frequency with which payroll is paid to employees. Now this might have changed, weekly, bi-weekly, twice a week, monthly, or other. And let's say here, it says select the box that corresponds with your payroll schedule. If you don't know what your payroll schedule is and you don't run payroll, you probably can choose whenever you write yourself, if you're a self-employed person, when do you write yourself a check to cover any money? And the covered period is the 56th day. This is a regular covered period. So this is your covered period normally. There's an alternative covered period, if applicable, that's a different date. But for your covered period, this is 56 days from the day you receive your proceeds. So if it's May 1st, you add 56 days from that time, that's your covered period. There's a lot of weird direction at that point on covered period. Alternative payroll covered period is, thankfully, some adjustments. If you had, let's say you got the money on the 1st, but your payrolls run on the 28th of every month, right? So what about those 2 days? Or do you cover those 2 days? No, you're not going to cover those 2 days. So from the 1st till your next payroll, I believe that's what it's saying, for the next pay period. So say at the 28th to 15th is your pay period. You don't include the 28th to the 15th. You start your 56th day on the 16th, when they started working on the 16th, throughout the next 56 days, right? That would be your alternative payroll covered period. If you happen to get the money on a different day, this was a lot of people's questions. So you can have alternative payroll covered period if applicable. If you receive more than $2 million, you are probably not my client, so I'm not going to go over that. But if you did, you might want to talk to your accountant about that. So if you receive more than 2 million, click here, and I think you have a whole nother section of instructions. Anyways, so then moving forward, so payroll and non-payroll costs. So you got money. It doesn't say how much you got money. Oh, you did have a, let's see, you say you got $30,000, right? And you had 4 employees at the time of application. I'll just kind of, this will refer back to this. So $30,000 in flow. So payroll costs. And so now we start referencing multiple pages in this application. So enter the amount from PPP Schedule A, line 10. So I've printed out my schedule here, and you will want to go to Schedule A, line 10, which is page 6. We're going to go to page 6. So you skip and you go to this page 6 here, which says PPP Schedule A. So we're looking at the bottom line 10, right? So in order to put anything in line 1, you need to go to page 6 and start filling out page 6 so you can get to a line 10. Okay, so if you're doing the PPP Schedule A, in order to fill out line 1 on the payroll and non-payroll costs, you need to go to this PPP Schedule A, page 6. So then you're going to start, and you are going to, line 10 is an addition of all the other lines. So you have to fill out the other lines before you get to line 10. You can't just put in line 10. So if you are a, so then in order to get to line 1, box 1, from the PPP Schedule A, now we're referencing another worksheet. So now in order to finish line 1 on this Schedule A, you need to go to another worksheet to fill out that line 1 so we can get to line 10. Sabe? So now we're gonna try to fill out box line 1 here. You're going to have to go to another form, sorry. So just stay with me. We're gonna go to this one here, which is PPP Schedule A worksheet. And you are going to, in order to fill out this one right here, it says table, worksheet A, table 1. So let's go to worksheet A, table 1. Let's not forget where we're at. So table 1 says list employees who were employed by the borrower at any point during the cover period. Let's just say we have a normal cover period. We're not going to do the alternative cover period. And you receive compensation of from borrower at an annualized rate of less than or equal to $100,000 for all pay periods of 2019. So anybody who is making less than $100,000, or if you were making less than $100,000, you have to reduce it to that rate, equal or less. So let's say this is Main Street Dad and blah, 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 blah. And they got cash compensation of $3,000. Main Street Mom, blah, 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 and they got $5,000. And so at that point, you have box 1 is $8,000. Let's make it a little bit more. Main Street Child, whatever their social is, and they got $5,000. So you're looking at $13,000 in box 1. Now, box 2, average FTE is to figure out whether you are going to be more than $100,000. So these people, let's just say they're not getting paid $100,000 at that point. They do not need their hourly or salary reduced by any amount. So we're just going to say $13,000 for the cover period. Cash compensation. Let me go over what cash compensation means. Enter the sum of gross salary, gross wages, gross tips, gross commission, paid leave, vacation, family, medical, or sick leave, not including the coronavirus stuff, the allowances for dismissals, et cetera, et cetera. For each individual employee, cannot exceed $15,385 per employee. Average FTE, we do have to put this in, I'm sorry. Average FTE, this calculates the average full-time equivalency, which is FTE, full-time equivalency, during the covered period or alternative period. For each employee, enter the average number of hours per week divided by 40 and round the total to the nearest tenth. The maximum for each employee is kept at 1. Simplified method is that assigns a 1 for employees who work 40 hours or more per week, and 0.5 for employees who work fewer hours may be used at the election of the borrower. And you can find all of this information down here, which is not here, it's up here. Average FTE. Calculation will be determined whether the loan forgiveness amount must be reduced concerning full-time equivalent employees. Now they did start giving some concessions on this when they found out that not everybody can go back to full-time work right after they open up again. And then employees may or may not come back to work because there's no business to be had. This is just my take on it. But what they're starting to say is now there's a safe harbor that's allowed, and that allows you to get your employees back up through June 30th. That's the safe harbor. So right here, a safe harbor under applicable rules is exempt from the reduction, blah, blah, blah. If the borrower restored its full-time employees level not later than June 30th, and you would be considered a safe harbor exclusion, and you don't have to do it within the 8 weeks potentially, if you can figure out this application. So some of my clients will benefit from this, because you can't just open up your business, expect everybody to come back when you have no business. Everyone is still shut down. There's not anybody going to the places to eat or get coffee or buy stuff out of their store. There's nothing to be had. There's no business to be had. So they're allowing you to go through June 30th to get back up to full-time employee status. Back down to here. Average FTE, I believe at that point we need to say it's, let's say that would be their average FTE. I think they're looking for a 1.0 in these things, so you'd have no salary reduction at that point. Essentially, that's what it seems to be saying. There's the large calculation for this one, and we might do another video just on this portion. Let's say you have no salary reduction in box 1, in table 1, and everyone made less than $100,000, you're good. So if you have more than $100,000, you have to do this one here and then decide whether you need more information. The full-time safe harbor, I am going to do another video on that. That's a completely separate issue almost. If you don't spend your money within the 8 weeks and you didn't have full-time employees anymore. Let's say you did have full-time employees, you're paying it out, your people came back, $13,000. Now we have table 1, box 1 is $13,000. We go back up here, enter cash, box 1 from here, $13,000. Enter average FTE. That would be the PPP worksheet 1 with box 2. So that will be, I'm not exactly sure what they're looking for, but I think it's a 1. Enter out, there's no salary reduction. So we're not going to have a salary reduction. So it's going to be 13,000 times 1, which is the average of that. And so you're going to have the full 13,000 be forgiven, right? Theoretically. So let's keep going. Then you have PPP Schedule A Worksheet 2, which is if you, table 2. That's if you have employees that have more than $1,000. This client did not have anything from that. They're not having, these table 2 is list employees who make more than $100,000. This is not Main Street Diner. Non-cash compensation, payroll costs during the covered period or alternative period. So here's where you put in for your employee health insurance. So they had 3 employees, let's say, and they cost $2,500 for health insurance for the covered period. Actually, let's put $3,500. That sounds more like it. Employer contributions to retirement plans, let's say $1,500. And total amount paid by borrow for employer, state, and local tax assessed on employee compensation. So this would be, for example, your GE taxes in Hawaii. So on $13,000, GE tax actually came out saying they weren't going to assess tax on the PPP funds. So it's kind of unguided right now. But let's say they eventually do say the $13,000 is considered income. Okay, times 0.045. So $552.50. Now, then we go to line 9. Total amount paid to owner, employee, self-employed partners. This may not be included in any of these regular payroll stuff. So if you're a self-employed individual, general partners, you have 1065, you have Schedule C, you're paying other compensation to owners other than 941s, read the instructions. This is where you would put that money. So let's say the grandma is the owner of a Schedule C Main Street Diner. She employs her family, but she pays herself a regular check. So that is, let's say, $5,000. Now we get to do the fun part. Now you can actually add the total payroll costs. This is how you would add your payroll costs together. So we get the calculator out. 13,000 of regular payroll, which we've calculated, plus 3,500, plus 1,500, plus 5,250, plus $5,000. 23,55250. Okay, great. So that's the payroll cost. So you'll notice that is 23,552. So that has to be at least 75% of what we had put on here. So let's see if that's 75% of that. 22,500. We are just above 75%. So looks like we're doing really well with the numbers so far for his whole PPP to be forgiven. He's right over the amount. I would put more money if you've paid more money, and then if you have more payroll costs, put more payroll costs and less utilities. Not that it'll help your application, but the payroll costs have to be at least 75%. If you have not reduced the number of employees or the average, skip these lines. So we're going to kind of skip this for now. Let's just say everything was 1 and you had everything. You're going to enter 1 on line 13 because you had all your employees back to full-time status, which is the calculation to figure that out based from January 1st through March. What's that period? It's in here. You figure out what your, January 1st through March 31st. Then you figure out whether you've reduced their payroll, and that will be at this full-time equivalency reduction calculation if that applies to you. We'll do another video on that. That's a whole other thing. Then you have safe harbor. At that point, demographics, show you demographics. You're looking at payroll costs, and that's just payroll costs. Oh, okay, so that was line 10. So this is the payroll cost that goes back to we're done with this worksheet now. So we're gonna go back to the original form here. So what was that, 20? Now we've figured out what line one is. Wonderful. That only took 500 hours. Okay, so next, line 2. You are going to do any business mortgage payment, interest payments. Now, you cannot do mortgage payments that were done or not under contract by February 15th of 2020. So if you got a new mortgage payment after February 15th, 2020, do not put that here. So if you had any mortgage interest payments, we're going to do that. But this company did not have any mortgage interest payments for the business. This is not your personal home mortgage. And I don't believe your home office qualifies. But we'd have to, if that applies to you, give me a call. We can talk, we'll talk about that, and I'll probably show you that it has to be under the company's name in the mortgage in order for that to qualify. However, business rent or lease payments. So this will be the rent on your office space that you pay if you have office space. So you want to, it says enter the amount business rent or lease payments for real or personal property during the covered period, blah, 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 pursuant to lease agreements in force before February 15, 2020. It does actually say for business mortgage payments, any business mortgage obligation on real or personal property. The key will be any business mortgage or rent or lease obligation. So it has to be connected to the business, in my opinion. That would be my suggestion. Let's say they pay $1,500 a month in rent, so $3,000 for the 8-week period. Business utilities. So business utilities I found online for the PPP seems to be distribution of electricity, gas, water, transportation, telephone, or internet access, for which service began before February 15th, 2020. Not necessarily sure how you do transportation for your utilities, but I would be interested in hearing about that, actually. Anyone had information about that? But your utility payments will you typically know what your utility payments, internet, phone, etc. So let's say their payments are pretty low, $500 for their business utility payments for 2 weeks. We don't have adjustments for their hourly rate wages. You're going to do the 1 here, and you're going to add amounts 1, 2, 3, 4 together. This is such an IRS form. I love it. Okay, let's see here. So you're going to add 1, 2, 3, 4 together. 1, 2, 5, 250 plus 3,000 plus 500, 27,052.50. No hourly reduction, full-time quotient. So you are going to do, drum roll please, 27,000. So you're going to, okay, let me show you how to do this. So you had 0 here for full-time reduction. Then you're going to add 1, 2, 3, 4, 1, 2, 3, 4, and subtract the amount all in one document, all in one fell swoop. 1, 2, 3, 4 minus this equals this, FTE. We didn't go over that video yet, but that's another video. This lady didn't have any reduction, and the total potential, love that word, potential forgiveness amounts will be line 8. That's 27,052.50. PPP amount, if you remember, was $30,000. So line 9 is your PPP amount, which is the $30,000 that you put on line the PPP loan amount here. And then for line 10, you're going to take the payroll cost, which is the $23,552.50. So we do $23,552 divided by 0.75, $31,403.33. That will be the payroll cost requirement. And at that point, you do the loan forgiveness amount of will be the $27,052.50. So at that point, you will have a loan with the bank account, with the bank that lended the money, and you'd have to pay some of it back. But other than that, your payroll cost, that line 10 is the division of line 1 up here by 0.75 to give you that information, which then your forgiveness amount is the smallest of 8, 9, or 10. Hope that helps. Jocelyn with Just Accounting. I care about your bottom line.